We will have much more on the markets coming up. But first, we do have a trade alert to bring you. Josh is making a move in technology. I guess technically it's consumer discretionary, but you'll get the point. Josh, you are adding to your Amazon position. So why and why now?
It's backing off a little bit this week, along with most of the market, most of the large cap tech names. But Amazon really has done nothing for a long time. I've been in the stock forever, by the way. So I'm adding to an existing position. I don't know how crazy important the timing is, but just the rationale here is that Amazon is both going to be an important player going forward in AI. Even as that theme is cooling off a little bit, it's undeniable how critical they'll be. But it's a business that doesn't need the hype of AI in order for the stock to trade higher, just on the existing situation that they're in. Gross profit has been compounding at a 20% CAGR since Q3 of 2020, even though the stock has done nothing or been down most of that time. In Q3 of 2020, AWS was about 10% of revenue. As of last quarter, it's 17%. That's important because that helps the EBITDA margin grow. That's the most profitable business that they're in, obviously. EBITDA margin as of last quarter is now higher than all pandemic era quarters except for Q1 2021. It's about 14% as of last quarter. This is critical. These are the types of stocks that are working right now in large cap tech. Amazon is a 14 forward enterprise value to EBITDA. It is cheaper than it's been for most of the last 3 years. It was about 22 times on average since the pandemic began. I think that we've seen troughs in the valuation here, and I think if they can continue to execute, this stock should be higher. It's not a rocket ship. It's not, I don't expect it to double from these levels, but there's no reason why we couldn't get back to the old highs of about 180, 190, just based on existing fundamentals without anything radically changing.
These are interesting points to bring up for folks out there, only because we do know that Amazon is traditionally what people refer to as a web e-commerce giant. These days, the narrative has switched a lot more towards cloud computing. That's the faster growing part of the business. But I wonder, and maybe Sarat, I'll look at you for this one first. If you take a look at Amazon right now, would you play it more as a consumer discretionary play, or more as a technology play tied towards things like cloud computing and then connecting the dots eventually at some point to artificial intelligence?
I think cloud computing would be the area. I think on the retail side is pretty tough. Margins are going to get harder. Costs are, the consumer is going to start slowing down. So it'll be fine there. But if you're going to play Amazon, that's the part where the cloud, the AI, where they can use their technology and actually leverage. Now, the question is competition in that space as well. But I think the margins and the upside are there, and the stock can reflect it if they can be cash flow positive in that area.
What's interesting, we've also got some headlines coming out here. And Kerry, I'll look to you for this one here. We're seeing that Amazon is just announcing that they are going to hire 250,000 employees for the holiday shopping season.
Is that all?
Is that all? It's 250,000 people. If memory serves, it was roughly around 150,000, I think, last year. That's no small amount either.
Yeah.
This is about the time of year when many of these large retailers talk about the seasonal hiring trends. Is it a positive sign that they're going to hire 250,000 seasonal employees, and what does it say about the consumer?
I think it says they expect the consumer to be pretty strong. So I consider that, yes, positive. We own Amazon. I mean, Amazon stock is up over 60% this year. Of course, it had a dramatic drop last year. So it's recovered, not all the way, as Josh pointed out. And we like it here. And I agree with Sarat that a lot on the cloud computing side is, it's very important for Amazon. They have competition in all of their businesses. And I think in this season, we do think about the consumer and spending, and consumer spending has been reasonably good. The retail numbers have not fallen off a cliff. I mean, there is obviously some weakness in spending, but the consumer is pretty good. And think about where unemployment is. It's still under 4%. 3.8% is basically full employment. So they must feel positive, and I consider that to be a good sign for the stock.
In another related headline, Jim, for this Amazon release, they also talk about this idea that they are investing $1.3 billion towards pay raises for employees at Amazon. You juxtapose this with what's going on in Detroit and other auto manufacturing facilities around the country. You juxtapose that with many of the moves that we've seen by retailers and restaurant-type companies to boost the minimum level of wages to a level that's above current mandated minimums. All of this is big, but it also adds to the idea that the consumer is strong and maybe getting stronger.
Yeah, that's exactly right. Okay, I'm going to take the bait, which is to say, yes, there are some inflationary aspects to what you're hinting at, and certainly that's writ large in the UAW auto manufacturers negotiations going on right now. But the bigger thing, here's where I spit out that hook about the inflationary thing. The bigger aspect here is Amazon's not hiring 250,000 people, and Dom, I'm pretty sure that Target also announced they're hiring 100,000 people. You don't do that if you don't think the consumer is pretty strong. Now, fourth quarter is where retailers make the bulk of their money. And last year we had a pretty kind of not so good fourth quarter because of what was going on in inflation. People were worried about the economy, worried about recession. We're in a different situation right now. Carrie referenced the fact that the labor markets are strong. Inflation's coming down, which has got another update on Atlanta Fed GDP, which maybe doesn't matter so much about stock prices, but it does matter to where employment's going. And it's at 4.9%. Things are good. Things are good right now, okay? Now, September, and Josh, you made a great point. I just want to come back to this. I forget exactly how you phrased it on your Amazon purchase, which I commend you on. You said something like, I'm not sure I'm crazy about the timing. Okay, nobody knows if this is the right timing or not. But, you know, whether it's the wrong timing or the right timing, we're talking about a matter of weeks. Because when we get through September and all the usual September worries, the consumer's cracking, inflation, this, that, and the other thing, everything we're talking about right now in terms of fourth quarter consumption looks pretty darn good, and you're likely to have a face-ripping rally. Amazon and everything else is going to do well. So if you're wrong on the timing, Josh, maybe it's by a couple of weeks, but who cares?
Okay, so we want to...
Thanks, Jimmy. I would just, one quick thing. It's important to point out, if the reason not to buy Amazon is that it's competitive, like... That was the same reason 40,000 percentage points ago in share price. That's a constant. When you do business with consumers, there will always be big, very well-run competitors. So in the case of Amazon, it's Target, it's Walmart, it's all the little stores on Shopify, maybe it's Costco, whatever. Like everyone understands this competition. The stock hit a 52-week high last week. They had competition last week too. There's a Prime Day event. It's the big deals day. So timing-wise, that's October 10th and 11th. And to Jim's point on the consumer, we're in a 3.5% headline unemployment environment. You could talk all you want about higher mortgages and gas prices, but the reality is everyone's working.